Strategy sold 32 Bitcoin in the last week of May. The company holds well over 800,000 coins. That sale is a sliver of the position. The morning price is near $63,000. It brought in about $2.5 million. The proceeds went to fund the dividend on the company's preferred stock. It's the first sale Strategy has shown in years. The position itself is barely smaller for it, and the model behind it is what changed. In any market, a sale can do two things at the same time. One is the actual flow. That's the coins that leave one wallet and land in another. The other is the signal the sale sends. The two often move together. Sometimes they don't. When a concentrated holder sells, the signal can be much larger than the flow. The flow is the size of the sale. The signal is the size of the position the sale came out of. A sale from a small holder says nothing. A sale from a position that holds a measurable share of the asset says something. The market reads the second sentence, not the first. This is the structure under most large holder stories. A central bank moves a ton of gold. The flow is small against the world gold market. The headline is loud because the seller is a vault everyone has been tracking. A large fund unwinds a few percent of a position. The trade itself is small, but the reaction is large. Concentration is the loudspeaker. The size of the sale is the words. The size of the position behind the sale is the volume the words come through. This is where strategy enters the picture. The company is the largest publicly traded holder of Bitcoin in the world. The position has been built up steadily over 5 years out of money raised in the public markets. The company is based in the United States. On June 1st, the company filed a notice with the Securities and Exchange Commission. The filing disclosed a sale of 32 coins in the last week of May. The average price came in near $77,000 a coin. The filing said the proceeds would go to fund the dividend on a piece of the company's preferred stock. The preferred stock is called STRC. Inside the firm, it's also called Stretch. The sale itself was small, a sliver of the company's full position. The last sale Strategy reported came in December 2022, near a market low. That earlier one was structured for tax reasons. This one was structured to fund a quarterly dividend payment. The shape is different. The market reaction came the same day as the filing. The company's shares fell about 7% in pre-market trading, and Bitcoin itself drifted slightly lower. And then the second leg followed. In the first week of June, the company bought another 1,550 coins for about $100 million. Now the position is slightly larger than it was before the sale. The shape of the sale is the news, not the size. A piece of a corporate position has been turned into a dividend funding instrument. Those coins are not the point. The mechanism behind them is. The model used to run only one way. The company raises money. The company buys Bitcoin. The position grows. The dividend on the preferred stock had been funded out of new equity. From last week on, part of it can be funded out of the Bitcoin itself. That's a different shape. Other corporate holders of Bitcoin will look at it. They will see something useful. A public company can hold a hard asset and still pay a regular cash dividend to shareholders. They won't need to design it from scratch. The plumbing is now in the public record. and over the long run it could spread. A holdings model built on pure accumulation is one shape. One that converts a sliver of the position into a steady cash stream is another. Both can coexist. Both can hold Bitcoin in size. The second one looks more like an endowment than a treasury. That's the part of last week that will outlast the 32 coin sale. The chain has not seen the news from the strategy filing. The chain doesn't read filings. It doesn't track preferred stock. It doesn't ask whether the next coin moved was bought or sold by a publicly traded company. It doesn't ask what price the trade printed at. It moves the coins. It records the signatures. It checks the work. The block that landed about 10 minutes ago paid out 3.125 new Bitcoin to whichever miner found the answer. The next block will pay the same. The block after that, the same. The schedule of new coins is set by the code. The cap is 21 million coins. Forever. The next halving is still scheduled for around April 2028. None of these constants moved when Strategy filed its 8K. None of these constants will move when Strategy files its next one. The chain doesn't ask whose coins moved last week. It doesn't ask whose moved this morning. It doesn't ask whose will move next month. It checks the signature on each spend. It writes the entry, and it moves on. That isn't a slogan. It's what the rules of the protocol say. The size of the sale is where most pushback lives. A sale that small is essentially nothing against the company's full position. As a flow, it doesn't move Bitcoin. What moved last week wasn't the flow, it was the news. Selling tiny slices of the position to pay a preferred stock dividend is now part of how Strategy operates. The mechanism is the change. The size of the slice is small enough that it can repeat for years. The position doesn't take a dent. On the comparison to a gold mining company that pays a dividend, the parallel is close, but not the same. A gold miner sells fresh production each quarter. The output of the mine pays the dividend. The reserves in the ground stay where they are. Strategy is doing something different, though. The dividend is being paid out of the reserves the company already holds. Each tiny sale draws from the stockpile, not from a new production line. Over a long enough run, those two models look different. The miner's reserve stays roughly constant. Strategies, in this model, slowly converts. The buying side is much larger than the selling side right now, so the net is still accumulation. The shape of the cash flow is what's new. Some are reading this as the end of Strategy's pure accumulator era. Well, that's too strong. The company bought back roughly 50 times as many coins the week after the sale. The position is bigger than it was before. The model now has a tiny sale leg and a much larger buy leg. Both happen. The pure accumulator phase had only the buy leg. This phase has both. That's a shift in how the company funds its dividends. It is not a shift in whether the company holds Bitcoin. Is this bearish for Bitcoin? Not really, by the numbers. Spot Bitcoin ETFs have been moving hundreds of millions of dollars in a single day over the past month. The strategy sale is smaller than the daily rounding error on the institutional side. It's a piece of news. It tells the rest of the corporate treasury world a different story. The model is now in public view. Other public companies that hold Bitcoin can see exactly how the plumbing works. Some will adopt it, some won't. Either way, the precedent now sits in an SEC filing. The chain itself doesn't react to filings. The market reads them. Critics have pointed to the sale price being well above the company's average cost basis. That's a fair observation. worth working through. Strategy's average purchase price is about $75,700 per coin. The sale price came in higher. The coins came off above the average. That's a small profit on paper, on a small slice. What it tells us is the company isn't using BTC sales to recognize losses this time. The earlier sale was structured around tax accounting. This one is structured around dividend funding. That one was opportunistic. This one is mechanical. The difference shows up in the price the coins came off at, and in why the sale happened at all. So just to sum up, again, Strategy sold 32 coins to fund the dividend on a piece of its preferred stock. The block subsidy paid out 3.125 Bitcoin on every block on the same schedule it has run on since 2009. Thanks for showing up for this one. The channel will keep tracking Strategy's next 8K filings. We'll watch the cadence of the dividend-funded sales, and whether other public companies that hold Bitcoin start to adopt the same model. If you want to keep following this thread, subscribe and hit the bell to stay in the loop. One earlier piece on this channel covers a parallel question. Saturday's piece on Bhutan's sovereign Bitcoin sell-down lays out the same question at a different visibility layer. It's linked in the description. Have a good one, and catch you on the next.